Hello and welcome to another edition of Stockwatch on the last day of the trading week, Friday the 13th, and we're hoping that traders such as yourselves that are trading stocks are looking to get the best out of the last trading day of the week, which is the most important really, because we see a lot of sell-offs usually in stock prices. So looking at Disney and Airbnb today, they've released their earnings per share, and Disney have exceeded Wall Street expectations, which was going to be quite predicted, let's say, after not only their streaming service has actually come on leaps and bounds, but also their parks and recreational facilities around the world have opened up during the end of the second wave of the pandemic. So let's just take a quick look at the numbers then. So earnings per share came at 80 cents with a 55-cent expectation, and revenue was up $17.02 billion versus $16.76 billion, and that caused the shares to jump over 5% in yesterday's trading. So like I said, Disney's parks, experiences and products segment returned to profitability for the first time since the beginning of the pandemic, which was very buoyant for stocks and very important, because obviously it gives us a little bit more of impetus to know that Disney is going to keep on pushing for these record revenues for the next quarter at least. Airbnb stock has been a little bit choppy in recent sessions after the company did report its second quarter earnings as well. The company beat Wall Street expectations, but the CEO did say that the COVID variant of the Delta variant, let's say, is actually going to probably come back to haunt them, as they do expect it to be a bit choppy for the company as a result of this variant. The company said that although it expects third quarter to deliver its strongest revenue on record, it expects quarter three nights and experiences booked to be below that of quarter two and quarter three in 2019. So kind of expected if you think about it, because it hasn't really got over the pandemic yet. So Disney on the first hand, we're just looking at this choppy action at the moment. So with this recent buoyant news of just put that in red, of the stock price, we're just looking to see if it's going to start testing these recent highs of roughly about $185 in the meantime. So that would be quite significant. Not too much in the way of divergences on the daily chart at least. Just seeing if we're going to keep out of this engulfment of the cloud, and that will keep impetus to the upside. As you can see, it tested the bottom candle at the moment on the top border of the Ichimoku cloud, so that is quite significant for it to stay above the cloud and start pushing higher. If we look on the intraday chart as well, again, we are trading above the Ichimoku cloud, which is very significant. And again, the impetus is formally on the upside for myself anyway. I've already put a buy position in that sense. So we'll just wait and see how that develops in the near term, especially. Airbnb as well, on the other hand, daily chart as well. Just looking at the moment to see what the opportunities are. It has been brought down a little bit after bouncing at this recent period. But a very choppy sideways movement at the moment. So just waited to see. It looks like it's getting a bit of resistance from the lower border of the Ichimoku cloud, which is again very significant, because it needs to penetrate and get past this, for bulls perspective especially, for it to start moving higher. If it doesn't, then it could see another leg downwards, as you can see here. Very choppy action, and it could actually fall below the 140 mark very easily. Let's just take a look on the 4-hour chart as well then. So nothing too much in the way of divergences on the RSI, as again, like Disney. So just waiting to see what the opportunities are in that sense. I'll just be looking to see if we can start climbing above the previous peaks, but if not, then we could hit a bit of a resistance barrier here and then move down lower, which is probably going to be expected in the next few trading sessions. So just a few things to keep lookout for in the next few trading days, and we'll see what the opportunities are. So yeah, as I said, with Disney, it was highly predicted, because obviously their theme parks are opening up and a lot more people are spending on products as well. It's not just to do with the streaming option that it has, against its rivals Amazon Prime and Netflix. So just something to keep an eye out for in the next few trading sessions, and as we go into the third quarter as well. So that's all from the Stockwatch today. As usual, any comments or queries, please feel free to add them to the post, and I'll get back to you as soon as possible. So have a great weekend ahead, a great trend day ahead, and we'll speak again next week. Bye for now.